Smash the Bids Trading with an Edge channel. This is a collection of trading material to help you define your edge.
What's going on, traders? So this crazy market we're in right now, huh? Crazy. So let me start this. So I got a request to hear some of my thoughts on the market, do a public video on it. So I'm gonna go ahead and do that. But I want to start this off by saying, first of all, I have no idea which direction this market's going. I'm not here to say the market's going here and the market's not here to call it. There's a lot more. There's a lot smarter people. There's a lot of people with a lot more experience. If you want to hear the market calling, go ask some of those guys. They've been doing it for 20 or 30 years. So, but I will go over and I'll share some of my thought process, and I'll explain a few things that I've done and why I've done them, and where I think the odds are that we're going to head. One of the things that I live by is there's no such thing as 100% in the market, period. There's just not. Everything is like, the odds are we're going to do this, the odds are we're going to do that. Everything has a percent chance. There's a statistical probability of one direction or the other, that kind of stuff. So that's what I'm going to talk about. I'm just going to talk a little bit about why I think, where and what could possibly happen and what the odds are and the probabilities are. So I just wanted to start off with that this is unprecedented price action. I mean, this is unprecedented fear. It's more than I've ever seen. So I'm not even going to pretend for 1 second that I have that experience that, oh yeah, I've seen this, but I will. You might hear me say that I've seen this 100 times. Now, that's lower time frame price action. That's in the moment price action. There's lots and lots of things I've seen 100 times that's happening right now. But make no mistake, this environment, the fundamental environment, the sheer, the debt bubble, just the condition that we're in right now is unprecedented. The interest rates and, so anyway, I just want to start off by that. So what I'm going to talk about just some thoughts on where I'm at and why, and why I think things are going to do a certain thing or whatever, right? So we'll start off with some monthly. I want to talk about a little bit about the volume situation and so forth. So, the long-term traders, the ones, here's 2009, these guys here that accumulate some an average in this neighborhood, right? So we got a lot of volume right here. If you look at the volume profile on this, right? Volume at price. So we have a lot of volume traded in here, right? Lots and lots of volume. And this is where I'm at. So, this is me, 12 to 14, right? So my average is in this neighborhood, right? This is where I'm at. I'm in this camp. And then we've got guys that have been in for, further on down, a long ways. But we got a lot of volume in here. And then we got a lot of volume in here. Oops, I should change that color real quick. So, we've got a lot of traders in this neighborhood here, but not as much as down there. And then, we had some volume in this neighborhood, right? And that's kind of what the volume profile somewhat looks like in this area. This is probably a little bit bigger, a little bit closer to this one. But so this area up here was being defended by these guys. It's gone. Boom. Once that cracked, you see this, they'll defend it. The bulls will defend it. And once that cracks, all of this volume unloads. Not only does this volume unload, but this volume, is going to, do the same thing right in here. So not only is that volume unload, these guys unload because they're not going to go negative. These guys are starting to cut some of their position, reduce their risk. If they haven't locked in profits, they're starting to. And so that accelerates this move down here. You're going to have these guys defending, this area right in here. You're going to have them defending, a certain area. And when I say this area, these are calculations that I'm talking about based on my model calculation. I'll go over that here in a minute. But my model calculations are based on volume, where volume is traded. And I'm calculating from some other things. So, but I'll throw the model up here in a minute. I just want to kind of go over my thoughts first. So this volume here, they're going to defend this somewhat. When it cracks, same process. You're going to get these guys going to take some profits off, and then ultimately, here's their average. And if we get through this, we're going to see, a big flush through that. These guys down here, this is their drool zone. I call it the drool zone. This was these guys' drool zone for continuation. As long as this dip buy held, this is their drool zone, for boom, boom. Well, that failed and fell through, and these guys up here that just started in up here, they're out. Then this right down here is, these guys drool zone, right? Same thing. So they're going to defend it. But when it doesn't, it comes out, breaks down, and now they're defending. Their average. They're getting really close to defending their average. So now you have, and this is 23 area 62 that I keep talking about. This is their drool zone dip buy. So they're defending it. You have these guys defending it. You have these guys defending it. And we've seen over the last couple of days, some confirmation of this thesis. So we've seen some, dip buying and pops back up, dip buying, pops back up. The acceleration to the downside has slowed a bit. We finally got some decent pops out of this. Now, if this flushes, if this area can't hold, I expect to see, these guys defend their average, and then that's it. After that, boy, this is going to flush, and same thing, right? Same process all the way down. And so, based on that thesis, right? Based on that idea behind the volume and where I'm seeing the volume, where I think that the positions are being taken and scaling out of and so forth. So then if you look at it here on the weekly, you see the price action inside all of this, right? So let me just pull this up. 2362 is my calculated level. So I'm going to turn on calculations here. 2362 is my calculated level for these long-term buyers. That's the level that I was referring to, 2362. This is one we kept, defending. It kept being defended. And 23, where's that at? Yeah, it's right in this neighborhood, right? So this is what got defended. And then once we flushed, now we're coming down here. These are short-term. These are short-term traders. This is calculations based on this decline right here, and we just about tapped it. So the more I see, things trade around my model, the more confidence I get in them. I mean, we flushed today, and when we flushed, 2267 was the calculated low for me. That's where I expected, the bulk of the covers to come in, and 2280.52. So we didn't quite get there, but when this market, I'll take, $15 any day close to that. So I'm continuing to see trading around the model. I'm continuing to see confirmation of my thesis as being intact. Not only did we flush here, but we reclaimed 2362. So, what does that mean? Well, under normal market conditions, I would see that as a bullish signal. I love the breakdown of a key area from my model key area, and then to see the volume come back in and push it back over and close back over it. Normally that's a really bullish signal, but I'm not convinced of that now at all. And it's, it's the environment that we're in, the virus scare, the lockdowns, the supply chain breakdowns, the earnings that are going to suffer. We're not going to recover from this quickly. No stimulus is going to say that we're going to have some bad earnings. There's debt. There's so much debt. There's so much corporate debt. We're liable to see some extremely, violent price action to the downside again still. Based on everything that I just talked about, 17, 18, in my opinion, is going to be the area that's defended by the bulk of the volume down there is 17, 18. And so if we break this area, we're liable to see another flush down into 17, 18. So by no means do I expect a quick recovery and all that, but I do want to trade the bounce. I want to be short. I want to be longer term positions right now. And when I say longer term, I'm talking like 2 or 3 day swings, man. I'm trading options. And if I am in any stock, I have options being traded against my positions. I'm not going to get into that, but my risk is being managed with options and stock. So what I'm fixing to talk about is just my thought process on the day trading. If you want help with this too, I have a service, right? But I'm not here to sell that today. If you want to understand if any of this is like sinking in with you, come check it out. I use options to manage my risk. So what I'm looking for, from here is now that we've reclaimed, well, let me show you what we're up against here, which you all know this, but I'm sure most of you do. Some of you may not. SPX, the ES is the future contracts. ES is, traded almost 24 hours a day. So the moves that we gain during the day, ES tends to give up at night. And we just keep seeing this. We keep seeing it over and over and over again. It rallies during the day, ES sells it off at night. It rallies during the day, ES sells it off at night. Well, today for me this was the drool zone for the long-term dip buyers. Okay, there's a lot of accumulation happening in this range, and a reclaim of that. Normally, I would see that as a very bullish price action. In fact, they got a really smoking deal today, And if this, as soon as this accumulation is complete and those big money traders have their ads and they have their position that they want, that's when you're going to see this stock rip. And you won't see it until that happens. They will continue to stuff the move so that they can get the fills that they want. And like I said, I'm going to say this, I've seen it 100 times. I say that with a grain of salt right there, right? Because the market conditions that we're in right now are nothing like we've ever seen. So I'm not going to pretend for 1 minute that I think that the bulls are in complete control here and it's going to rip. Under normal market conditions, this was a really beautiful move today, because the smart bulls, the big money bulls, they let it flush. They let it come down to that cover that I was talking about, right? They let it come down to, let me turn that back on again. They let it come back down to the beautiful cover. This is the drool zone cover. This is the final target of my short trades right here. This was the final target. The smart bulls, they let it come down. They let it come down to that, and we get those cover bounces, right? You get all the shorts cover, and you get that accelerated covers, and all they have to do is, they can absorb some of that, and they can get a really good fill and let those covers drive price back up over. Doesn't make it right. Doesn't mean that I'm right. I'm just sharing my thesis, right? This is the idea. This is the volume, how I see volume around price, the volume profile, and how I see the price action based on my model calculations and what I see over and over again. So it doesn't make it right. Again, what can break this? They sell it off. But the bulls got what they wanted today, okay? They got exactly what they wanted. We still have accumulation in this area. It could do this for 2 weeks. The longer it holds 2362, the longer it keeps reclaiming 2362, the more convinced I am going to be that we're going to get continuation to the upside. Now, who knows, man? Every night ES sells off the move, right? And until that changes, until we see something different, I have no confidence on the long side, okay? So who knows where it's going to go from here. But if we see ES actually do something besides sell off at night, that's going to be a pretty good indication, the beginning of the end. But if the bulls are in charge, like I believe they are, we could see a nice rally. Now, I'm not dreaming that we're going to go back to all-time highs, and that's not even what I'm saying. I'm looking at these calculations here, and this is my drool zone, 29.38 for the short. This is my drool zone. If we could get back up to 29.38, I love it. 28.26 is my target for my first short that I really want to put on. 26.03 and 24.91. These are targets for short positions with targets underneath for covers, targets for short position with targets underneath for covers. My drool zone, my absolute drool zone. If these bulls could run this thing up before earnings and then let all these bad earnings come out and crush it back down here, we're going to get some beautiful trades. So I'm not saying this is going to happen, but what I do is I'm trading options, and I'm doing things like I'm accumulating some calls down here, okay? I know my risk. I know exactly what I'm putting on. I'm accumulating calls. I'm taking profits into the close, and I'm picking up puts. I'm accumulating calls. I'm taking profits at key levels into the close. I'm buying puts. So same thing. So this morning, we break down of my key level and all the calls that I have on, which I'm rolling profits every day. I'm rolling profits and taking on more and more risk with a piece of my gains. And then today we break down. So I don't have to cut this position. I don't need to cut this position. I'm still holding all the calls. I'm just getting the puts, which I had the gap gains from buying puts into the close. I have the gap gains already. And so we get the breakdown. I get my setup. I get short. I capitalize on the short move. It hits my cover zone. I get completely out of the puts. Why? Because this is my cover zone right here. I'm completely out of the puts. I'm just sitting on my hands. If we break down and we actually get even more selling, I'm looking for another short setup. If we bounce, which is what I think we're going to do, I'm looking at, these calls coming back. So by the end of the day, I'm back in some calls, at better prices, and I'm back over the entry on the calls in the first place. And so I was able to capitalize on the short side. I was able to capitalize with the puts on the short side. I'm still long. We get back up, and my average gets recovered in some call positions here, depending on the strike. Some of them are back, some of them aren't, but I'm back in the money here, and I was able to take profits on the calls going in, reduce my risk a little bit on the calls, and then pick up puts into the close again. Rinse, repeat, rinse, repeat. If ES keeps selling off you know, and I'll do it till it doesn't. Well, what if I'm wrong? Well, I'm holding a long position. I'm holding some calls. If ES does what I want it to, and it rips up into what did I say my target was? 2603, 2650. Well, there's a 200 MA right here on ES that can, you know, help support that. That's where I'm looking, you know, for another short entry. So if we do rip, I've got the calls. I've accumulated the position I was looking for. So anyway, I'm not going to keep rambling and going over everything. I just wanted to share with you, like, when I'm talking about anything, I'm using options, and I'm always trying to be on both sides. I use different strikes to pay for different things. If all of this sounds like something that interests you, you like to manage your risk, you know, I have a website, smashthebid.com, and come on in. I share my process in the Pro Trader group. I share my process. But again, I'm not here to play salesman. I just want to show you my thought process, how to request for it, and that's that. So if we continue to hold 2362, that's the drill zone dip buy for the long-term buyers. And as long as they can hold that, I think we can get some continuation. The bulls don't even have to run it up yet. All the bulls have to do is hold it to win, right? All they have to do is hold it, and they're ahead. People are going to start getting some more confidence, and especially if we come up with some kind of, you know, coronavirus relief, right? It's probably going to get worse before it gets better. So, but if we start to come up with some kind of coronavirus relief, and, you know, we could get at least a rally going into earnings. So I'm not thinking for one second that I want to be net long this market and we're going back to all-time highs. That's not what I'm saying. But I think we can get a nice rally into earnings on a bunch of really good stocks. And then when the earnings come up short, you know, it pulls us back down. We'll get another opportunity to get long and get short going into earnings. And that's kind of the game plan, but as it's all has to happen in the moment. It all has to, like, I like to see price action. I like to see it confirm. I like to see these levels. I like to see volume. I like to see these levels trade around my model like this right here. When I see that, when I see those covers right around my calculated levels, and I see that, as long as I'm seeing price action confirm my thesis, once we hit today, the high was 2562.98. My calculated level is 2562. When I see those things hit and fail, like that right there is confirmation that I'm on to something, that my thesis is correct, and I will continue to trade around it. So that's my thoughts. If you want to learn more, if this interests you or not, you know, options and how to use options to manage your risk, or how to use options, you know, to capitalize in this market, come see me. But anyway, like I said, that's not what this was about. This was just to kind of share my thoughts about the overall market because it was requested. So, and you can always DM me on Twitter, man. My DMs are open. I always answer. You know, you don't have to be in my service for me to answer your questions. So anyway, see you next time. Peace.